Hello and welcome everybody to NuView's Wednesday workshop. My name is Steve Maldonado and so excited to be back in the chair this week to be talking with Whitney from PassiveInvesting.com about the state of investing in car washes. Just a quick disclaimer before we get started. NuView is a passive IRA custodian. We do not give financial advice. We're not CPAs, financial advisors, etc., and leave it to our investors to do their own due diligence on these investments. Of course, we are here to answer any questions that you have about utilizing a self-directed IRA or 401k for the purpose of investing in alternative asset classes, but we will not give you tax advice. If you have any questions throughout the presentation, feel free to submit them via our landing page or through social media channels. We will queue those all up at the end and discuss them then. I'll just leave this up for a couple seconds so you can follow the instructions to submit those questions. And then on February 15th, we'll be excited to bring all of our speakers onto a panel to kind of discuss the realistic real estate market and get some expert insight from all of them, have some really great discussion amongst the group. So make sure that you submit your questions for that panel. You can do so by following the QR code link here. And without further ado, I'd like to introduce Whitney Elkins-Hutten from PassiveInvesting.com. She is the Director of Investor Education. Whitney, thank you so much for joining us.
Yeah, thank you so much. I am so happy to be here and to talk to you today about how to invest in car washes, specifically express car washes for cash flow. Now, I put my contact information here on the first slide. If you want to reach out to me directly, my email is at whitney@passiveinvesting.com. I want to get access to my calendar and schedule time to discuss car washes or other investment opportunities. You can go to passiveinvestingwithwhitney.com. I also have some free goodies for the audience as well joining us today. But let's go ahead and dive in. If you guys don't know me, if you haven't heard me speak before, I don't have a degree in real estate. I did not start off as the Director of Investor Education here at PassiveInvesting.com. I actually started off as an accidental landlord back in 2002. And I bought a house with a significant other. That relationship fell apart about a month later, and I had the house, I had all the expenses, and I didn't know what to do. So I stuffed it full of roommates, completed the rehab on the property, and for 11 months, all I could think about was selling the house and moving on. When I did finally sell the house and I sat down and calculated how much money I actually made on the project, I was surprised to know that I had actually made more than my salary. That had me traveling almost 70, 80 hours a week, working in public health. And I actually had not been paying for any of my housing expenses nor my utilities at that point in time. And I'm like, wow, maybe I shouldn't have sold the property. Maybe I should have held on to it. But how many more of these projects can I do? Now, my husband, who's now pictured here, he joined me in my antics. Then we did a couple more projects together. Got really good at building up buckets of equity, but what we didn't have was financial freedom. We didn't have that, the golden handcuffs were still on. We wanted to be able to really unlock that income for ourselves and provide for our family. And as you can see here, we have a daughter, and fast forward a few years later, we built up a portfolio of over 30 single-family rental properties. However, we didn't have scale, and really, we wanted to figure out how to scale without our own time involved in that process. And that put us learning how to invest passively in real estate. And there's a myriad of ways that you can invest passively in real estate, multifamily, self-storage, hotels. But today I want to talk to you guys about car washes. Now, I apologize for that ringing. I think it was an app somewhere on my computer, but hopefully we are going to get to the meat of the matter and no more calls like that. So as we scaled this portfolio, my husband and I were looking at single family properties. And when we finally decided to go into partnership on passive properties, we were able to amplify not only our cash flow, our time freedom, but also the size of the portfolio. And this is our personal portfolio. This is not what we've done at PassiveInvesting.com, but this has allowed us a result. And this is a result that many of you are probably trying to replicate for yourself, which is 100% control of how you spend your time and financial freedom. And so this is what I want to offer to you today, a discussion on how you can utilize investments in passive real estate and large-scale institutional assets to not only amplify your cash flow, amplify your equity growth, but amplify your return on your time. And these are just some statistics here that we've been able to achieve at passiveinvesting.com. We'll dive more into these at the end of the presentation. But today, I want to focus on education. Anything I say today, it's not financial, legal, or tax advice. So make sure you are consulting with your professional team before going in any investment, whether that's a controlled investment, a piece of real estate that you are purchasing, or a passive investment. All right. So I like starting off with why. Simon Sinek's book, always start with why. Why do we want to entertain express car washes? Why should they have a place in our portfolios? Well, we have to actually start back at what a car wash is and what makes it a good business model to actually invest in. Now, there's 4 different types of car washes out there. You've got your in-bay DIY car wash. This is where you might seen at the end of a strip mall, like 10 bays, concrete bays with drains on the floor, and you drive your car in, you drop your quarters in, you got the spray brush, you got the hose, and you're washing your own car. I always say we actually have a car that has to go through one of these car washes, and you always pray that your 10-year-old doesn't spray you with the hose as you're washing the car. Then you have your in-bay automatics. These are the type of car washes that are attached to service stations, and they might be able to accommodate 1 or 2 cars at a time. But if you're 3 or 4 cars back, you're probably gonna step out of line and go run another errand. So they're as convenience, not actually as a money generator. Now, on the other side of the scale, you have what we call a full service car wash. In this particular car wash, you are actually, it might be a little bit of a tunnel, but you drive up, somebody's vacuuming your car for you. You've got an army of people doing that. They're going to put your car through a 20 or 30 foot long tunnel. So they could probably get, maybe 15, 20 cars through an hour, maybe. And then you have an army of people at the end drying off your car, wiping down the interior. Now, these type of full service car washes are very labor intensive. And so it's hard to scale these type of car washes because if you don't have the staff or the staff doesn't show up one day, you can't operate the car wash. So really what you have is this intermediate car wash, okay, the express tunnel. And what this is you drive up, you have a whole bay of vacuum, so you could choose to vacuum your car or not. You could also choose to have somebody vacuum your car for you if you would like to pay for that service. It's going to go through a tunnel of probably anywhere from 60, 80 to 100 foot long tunnel that allows us to move multiple cars through at a time. And the tunnel is going to pre-wash, wash, wax, add tire shine. It's going to do everything, including dry the car. You exit the tunnel, you are ready to go. In this type of model, it really scales because you can actually wash 400 to 500 cars a day easily in this model. And you can run it with 2 to maybe 3 full-time employees, depending on how many high-touch services you decide to provide. Now, this is an amazing model that scales very efficiently and has a high margin of cash flow. And we're going to talk about that here in a little bit. But why the car industry in general? Okay, we've talked about why express car washes, but why this industry? Why now? Well, it's a $33 billion industry and it's growing. And the industry as a whole is growing at about 4%. But when we look at express car washes, that growth is almost double. It is the fastest growing sector of car washes. It's a very fractionalized business. Now, a lot of people have gotten into the car wash business, maybe have developed one. The easiest way to develop your own express car wash is to do it through a franchise model. This is great for people who have like $1.5 to $2 million to invest in this type of model for themselves. But you're a direct owner. And we're going to talk about how do you manage these locations here in a little bit. But it's a fractionalized industry. So less than 15% of the owners actually own more than 5 locations. So it's a if you decide to get into it and own it yourself, it's a very hard business to scale multiple locations. And for those owners who have been able to get over 5 locations, those are the successful owners that have actually been able to implement like a regional operator and step out of their business and make it truly passive. Otherwise, these mom and pop owners, really what they found themselves is that they actually own another job. Now, we'll talk more about that in a second on what is happening now with consolidation. Also with this particular industry, it's a very low operational expense, high margin industry. The margins on this type of business are going to be 40 to 60% as the industry as a whole. Express car washes are going to be upper towards that 60% margin area. Now, let's talk about the customer. Now, the customer, the average person in the United States, 72% of people in the United States actually own a car. The average car owner actually washes their car 13 times a year. Once it's an established behavior, most people, research tells us, they don't give it up. So once they actually engage in the car wash, they're not going to all of a sudden start washing the car at home in their driveway anymore. And a majority of the car owners who they prefer express car washes, probably because of it's less cost intensive with their time, but more cost effective with the type of service they actually get. Now, when you talk about the behavior of actually washing your car, and people don't give it up, it makes it a very recession resilient asset class because, like self-storage, it's such a low drain on the day-to-day pocketbook for an average American that they are not going to give up this type of service. Even with the subscription model of $25, $35, $45 a month, they're not going to cut out that subscription service for all of a sudden trading it in and washing their car in the driveway. Another thing that compounds into this is that even during a recession, people actually take better care of their cars because it's harder for them to trade up into a newer car or even secure lending to get another car. So during recessionary times, people do tend to buckle down, but this is not an area that we see that they're actually eliminating that cost or removing it from the household budget. Now, we talked about the actual car wash. Being this industry being very fractionalized, being predominantly owned by mom and pop owners. And it's really in the early consolidation phase. So if you go back, for those people who've invested in self-storage, you harken back to 2006, 7, and 8, this is really where we're at with the car wash industry. Yes, we're going to see consolidation of currently owned locations. We're going to see some of these franchise models get sold off into individual ownership locations. We're actually going to see larger brands come in and kind of gobble up some of these car washes and be able to, layer on third-party management and then IPO them or do a large exit to a private REIT. Why? Is because these locations, the express car wash locations, are scalable. They're desirable for this. It allows, if somebody can solve the third-party management problem, this problem that exists in the industry, if they can solve that, then they're going to be able to shift their income from linear to residual. And they're going to be able to do so. They're going to be able to reap very high margins on it. The car wash industry, especially express car washes, can be very tech-enabled. And they can also be incredibly environmental. Due to building regulations, but also just like the different equipment that you can purchase for a particular car wash location. You can modulate the amount of electricity you use, the water usage. Many times the chemicals are actually recycled and cleansed out of the water before the wastewater is dumped back into the public supply system. And oftentimes you can actually recycle that clean the wastewater and use it again in your business operations to help reduce your cost. All right, now let's get into the how. Now we've touched on a lot of through threads here, but I want to kind of tie this together because all these things that I'm going to mention to you, especially on the next 2 slides, would apply to whether if you wanted to invest passively or if you actually wanted to try to go and purchase your own location and run it yourself. So how to invest in a car wash. We are focused focus right now on express car washes only, okay? But these first two things is that they would apply to any car wash, right? You want to make sure that you're going to preserve your capital when you invest. So we want to invest in growth markets, all right, where markets, populations are growing, incomes are growing, jobs are growing, jobs are diversified. And we want to even get more specific down into that sub-market level, all right? We want to be very particular on the location of where this asset is, because like self-storage, it's going to be affected by traffic count. You want to make sure you have very high traffic count coming by your location. Now, a lot of questions that I get from investors, they're like, if I have a location, can I have 2 car washes across the street from each other? Absolutely you can, because then you get to take advantage of the person driving to work and then driving away from work. Just like you would have 2 gas stations or 2 oil change stations. Now, here's the kind of cool thing is even if we see a higher propensity of people moving away from gasoline-driven cars to electric cars, guess what? Electric cars still need to be washed. All right. Now, cash flow. Again, to help protect that cash flow, tap into that wealth building pillar, we want to focus on that very scalable model, express car washes. Now, the smaller the tunnel, the fewer the cars that you can send through. The larger the tunnel, obviously, the more cars that you can send through at a time. But also, the more ways you can add in, different types of lanes, like an express lane or something like that. It wouldn't impede your flow of traffic into that tunnel. Now, here's the very critical piece, and I encourage anybody to look at this, is make sure that you have direct ownerships of both the land and the brand, all right? It has become very popular to invest in franchise development models, ground up development that go into operations. But there's 2 fundamental issues with that type of investing is that you don't own the land, and you may or may not own the land, and you don't own the brand. The reason why you want to own the land is so you can control your profit and loss statement from end to end. You don't have to answer to a landlord who might be raising rents throughout the years for the land, and you don't have to, worry about them potentially selling the land out from underneath you, which would inhibit your business model, for other types of development. And the brand, this is really important. I really like direct ownership for this brand reason, because you get to control the brand end to end. Now, think about this. Like if you have 2 McDonald's locations in town, one is operated very well and the other one not so well, the one that is still operated well is going to take a little bit of a hit because of that brand recognition, that the way that name is carried throughout town for that particular brand. So those are, if you want to help preserve capital, preserve your cash flow, make sure you own the land and the brand. Now, these next 2 things, tax benefits and inflation hedging, these also apply to if you are actually wanting to develop your own location as well. Tax benefits, you can get really high year 1 depreciation because you can tap into accelerated and bonus depreciation. You can get that actively, you can get it passively. Now, it's probably, we tell our investors 70-90% year 1 losses, and it's because we can write off all the equipment as a business loss. All right. Inflation hedging. Okay. You can still get, adequate lending, lock into today's dollars in order to, reap future cash flow. So that's amazing. But I also think of them inflation hedging. Another way is that you can modulate your income and your expenses to adjust as price increases occur. With express car washes, what we look to do is we look to put all of our clients on a subscription model. So moving it away from direct pay to a monthly recurring revenue model. Now that also eliminates cash out of the system, so we can write off, we can get that loss of operations line item off the profit and loss statement. But one question I get from investors is they say, if we move to subscription model, what happens when that customer washes their car every single day? You can't stop them, but let's think about this. The subscription model, it costs about 80 cents to a dollar per wash, and that means electricity, water, all the chemicals. It does not include the labor on the property, but that's what it costs to actually wash a car. And the average subscriber into an express car wash, according to previous data and our data that we've collected currently, is that they wash about 1.8 to 2 washes per month. So that's still a very good margin there that allows you to ebb and flow with the market environment. All right. And you even more so with express car washes, you can actually adjust the operations. You can adjust the speed of the tunnel, which impacts how much electricity you use, how much water you use. You can actually, because it's tech enabled, you can keep track of these subscriptions and only apply tire shine to that person's vehicle, every fourth time, right? As opposed to every time. So you can really, that would help lower your chemical pricing. So you can really modulate a lot of parts of the business in order to, continue to keep your expected gross income or your profit higher. Now, how to invest passively. These, when we talk about equity growth, this is really where the real difference is between owning actively and passively. And it's not to say you can't achieve this with active ownership. It's just you've got to solve some massive problems in the industry. One is we're seeing this early consolidation because it's really the people that can actually solve that third-party management issue. Those are the people that are going to reap the benefits of actually investing actively in real estate and be able to get these large exits. We are actually building the first third-party management company for our portfolio, and I'll tell you why. We're looking to build a portfolio of 250 to 300 locations and then IPO that. We have a couple other exit strategies in our back pocket, but what it does require us to do is actually build that third-party management company so we can own that entire brand and manage that brand end to end. Now, other levers of equity growth, we still, we talk about it in multifamily real estate, self-storage real estate, is you have 3 ways to grow your net operating income. The similar term, NOI, when we move over to car washes, it's EGI, expected gross income. We're going to achieve that, again, by increasing income, decreasing expenses, and adding additional streams of income. By increasing income, we're moving clients away from that direct pay to a subscription model. I already touched on the operational efficiencies that we get with owning an express tunnel. Some cool added amenities that you can add in here are, free vacuums. Now you might go scratch your head like, okay, free vacuums doesn't really bring in extra income. No, but it does differentiate you from somebody else in the market who cannot offer that. And so for the same or just a slightly higher cost, we can actually pull them over into our market share. One of my favorites is offering pet washing. We can, for a couple $100 CapEx expense, we can install a tub and hose at these locations. And while your car is being washed, you can wash your dog. I have a dog, and I love nothing more than having a clean dog and a clean car. So those are a couple different ways that we can actually add value to help increase the membership or the volume of memberships. Now, another problem, this ties back to that third-party management fee or third-party management issue, needing to solve that, is what kind of exit are you going to have? Because if you can actually rapidly scale and package everything up in 200, 300 locations together, it's going to be possible for you to complete an IPO. Okay, that is where the real money is made upon equity bump is made upon exit. Now you can still get a great equity exit if you roll up to a large private equity firm or a REIT. Now, guess what? They don't want to directly own a car wash that they have to manage, so they will want third-party management. Otherwise, what's open to everybody is an exit, which is individual sale. Now, that is kind of like the education that I wanted to impart to you guys to really help you understand the express car wash industry, why we're so excited about this industry and the growth opportunities, what levers we're able to pull in order to provide value both on cash flow and equity, tax benefits, and capital preservation. Here's just a little summation of what we do personally with our particular car wash deals and our brand that we're building. Again, we're looking to build 250 to 300 locations in about 5 years. We're going to do that through acquisition of these mom and pop locations, but we're also going to do it through development. But here's the thing. You as an investor get to choose which side or both that you want to be on. We're going to be focused on growth markets, and we're going to own the land and own the brand. We're building that third-party management company for ourselves. We offer a 10% preferred return. Our cash flows by year 5 are going to be 12 to 15% cash on cash. Equity growth, we don't cap our investors. So we do 60-40 to 20% IRR, 40-60 to 30% IRR, and then 10-90 after that. The tax benefits, year 1 losses, which if you're joining, through this presentation, you're probably a self-directed IRA investor. This might be a good cash investment, so you can take advantage of the losses, but I still encourage people to look at this because of the returns. But you could generate 70-90% year 1 losses. And our exit strategy that we're looking to execute is going to be that IPO, yielding somewhere between a 10 to 14x equity multiple. Private equity roll up, we're targeting somewhere between a 4 to 10x exit, or individual portfolio sale, which will be between a 2 to 4x. On investor capital. But what's most important here, whether you invest with us, another operator, or do this yourself, is that you have to invest with the experts. Who know the strategy, that have a track record for execution and for exits, that have the ability to secure credit and lending for high quality assets, and they have the ability to reliably pull investor capital and close, and they have a team ready to support you and the asset as if it is your own. All right, guys, I'm ready for questions, but I do invite you, if you want to talk more about real estate, you can join me at passiveinvestingwithwhitney.com. You can scan the QR code here or go to the link. And, I've got some free goodies there. We can hop on a one-on-one call. I do a weekly master class. I do boot camps to help passive investors understand and grow their portfolio. And if you'd like to see deals, we have that as well.
Well, Whitney, thank you so much. What an interesting topic, an asset class, investment strategy, et cetera. Something that I have, only started just exploring, but learned so much more through your presentation. So thank you so much.
Mm-hmm. Yeah, my pleasure. Do we have any questions?
Yeah, let me take a look, Maggie. Doesn't look like we have any trickle in yet. As a reminder to our audience, you are welcome to submit those questions via social media or through the chat channels on any social media platform, YouTube, Facebook, LinkedIn, or Twitter is where we're streaming now.
I have had the opportunity to talk on this topic several times. Me just being an educator, I always take all these questions. I used to be director of investor relations at a private equity group. I just take all these questions and try to shove as many of them in there, but I'm sure there's 1 or 2 out there that I didn't get covered. So
let's see. All right, nothing in there. But again, if you are interested in talking with Whitney further, passiveinvestingwithwhitney.com, or of course, using her contact details provided in her presentation. Bear with me just 1 second. Looks like we have. Let's see. Oh. All right. Thank you, Maggie. Yes, and again, feel free to reach out to Whitney. Next week, we will have Alex Caseta on to talk about self-storage and investing. So please feel free to register and tune in for that. And then, of course, on February 15th, we will be bringing all of our guests back to have a panel. So again, please submit your questions for that, and look forward to seeing you all then. Again, Whitney, thank you so much for joining us. Hope you have a great rest of the day.
Thanks. You too.